Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video of Apple stock, ticker symbol AAPL. Apple's been hit very hard recently, obviously with the tariff news and just weaker growth than what a lot of people are expecting, especially given the insane valuation that it has on it. I used to hold Apple in my personal portfolio, but I made the decision to actually sell out of Apple at around, I believe, 250, 240, around there. Simply because I did a stock analysis video on Apple stock, and I thought that the valuation was too high because there hasn't been enough consistent growth, and it didn't seem to me like Apple was really working very hard to generate more growth. I think that Apple is the type of company that's very similar to Coca-Cola, where it's an excellent company that people love, and a lot of people use their products, but the valuation might not necessarily justify the amount of growth that they can have. To put it in kind of more simple perspective, I think that Apple has pretty much gone everywhere that they could possibly go. I think that they've done everything they could possibly do to get their iPhones in different places. And I don't really see a lot of growth from Apple overall as a company when you compare it to something like Microsoft or Amazon or even Meta. It just seems like they're kind of resting on their laurels, which is completely fine because they're generating a lot of money. But I don't think that as an investor, you would want to necessarily get in. Now, I'm also not saying that if you've made a lot of money off of Apple, it's a good time to sell out. It just depends on your own current investing philosophy and kind of what you want. If you want a company that's going to very consistently deliver good results to you, I think that Apple is great. I think it's going to continue to generate great results. I think it's maybe the most sound, safest company you could be involved in. The amount of people that switch from the Mac ecosystem once they're in is only like 8% or maybe even 4%. It's very low for the amount of people that once they get an iPhone, they go back to Android or a Google or another competitor. So I think that Apple is very safe and very secure in their amount of sales, but there are definitely some concerns over so much of their supply chain being in China. And this is a very expensive stock in terms of the amount of growth you're getting for the price. Now, looking at the stock performance, Apple is up 12.23% over the past year, which is kind of misleading because the stock currently trades for $198.15 a share. And we can see that the 52-week high was $260.09, and the 52-week low was $164.08. It has a market cap of almost $3 trillion, 2.98, and a price to earnings ratio of 31.5. Apple also does pay a 0.5% annual dividend. I think that the stock is in a better place than it was before if you were looking to invest in it. Obviously, every stock has been hit very hard by tariffs, but this is especially concerning when you think about how much of Apple's labor is centered in China. And if we go to the analyst opinions on Apple, we have 46 analysts rating the stock total, with 7 rating it a strong buy, 21 rating it a buy, 15 rating it a hold, and the rest rating it a sell. And the analyst price targets range anywhere between 165 to 300, with an average analyst price target of 238.75. So obviously analysts are kind of all over the place on this stock, and it kind of makes sense too because everything's sort of up in the air in terms of tariffs, because the tariffs are really going to cause higher costs, and Apple really has kind of just two options here. They can either eat the costs and charge the same amount for the iPhones and make less money, or they can charge more money for the iPhones and pass that cost on to the consumers and risk losing people that they've already gotten that love the products and are all in on the Apple ecosystem. So Apple has a very difficult decision to make if these tariffs stay at the extreme rate that they are with China. And there's a lot of uncertainty there. I don't necessarily like uncertainty when I'm owning a stock. I do think that if Apple is cheap on a DCF basis, then it's probably a buy because I think that it's very safe. You know, it's a very difficult company to justify buying into if you're paying a premium on it right now because it seems like all of the surprises could be negative. I will say that the App Store has been great for Apple. Every couple of years, they bring out a great product like the AirPods, like the MacBook, and all of these products kind of sync together very well. I think that the products are very user-friendly. I think that people who buy Apple are very much not as much supercomputer people, but more they just want a product that works very well and is easy to use and increases their productivity. And I think that Apple does that better than anyone else. So I will say that it's an amazing company. But if you're buying it at a premium right now, I don't think it's the time. But let's go to the DCF model for an analysis on what the fair valuation might be. Here we have the weighted average cost of capital at 7.45%. And from what I could tell from the balance sheet on Apple, they did not have an interest expense for their debt. I'm not really sure exactly why, but this does just kind of make sense that maybe they're using this debt just as a tax shield or something like that. And it doesn't really affect the weighted average cost of capital very much. As you can see, they're only 3.46% debt weighted. So this weighted average cost of capital is very in line with this cost of equity when we have a beta of 1.26, an average market return of 7%, and a risk-free rate of 4.255%. Now, moving on to the actual DCF model valuation, we could see here that the average revenue growth has only been 2.06% a year on average, including the trailing 12-month number, which may be smaller because it's going to include some of these numbers from the 2024 fiscal year. So you could kind of disregard that, but it is higher, so it's helping them. You also have kind of outlier years, like from 2021 to 2022, the revenue increased by 7.79%, but we did see a decrease in the revenue from 2022 to 2023 of 2.8%. We also see kind of decreasing cash flows. I think that's because they're either buying stock back or paying off debt. But overall, that's not good when you have decreasing cash flows. But don't mistake it. Apple is very, very, very well financed, very intelligent about how they're using their money to generate shareholder equity. A very mature company as well. Like I said, not a lot of avenues where they're putting a lot of money at risk for growth. And one thing that I do just want to say as kind of a side note, I'm kind of surprised that they're not trying to be one of the leaders in AI, because when I really think about Apple, I think of a company that innovates and is first and wants to be involved in these big, massive tech fights. And you saw that in the early days with the Macintosh. You saw that with the iPhone. They're usually the leaders in innovation in some way. And I haven't really seen anything recently in the last 3 years that leads me to think that. But getting back on track, I put a growth rate of 7% on average for the free cash flow over the next 9 years, with a perpetual growth rate of 2.5% and that discount rate of 7.45% that we calculated earlier. Even with a 7% growth rate of the free cash flow, we can see that there's 11% downside to buying the stock. Now, I do think that you could justify a premium for a company like Apple that's able to generate more money than a lot of countries. However, they haven't really had the kind of growth that justifies this level of a premium. I mean, I don't think it's realistic for them to get this 7% growth rate, especially with the tariffs. I think it's more realistic that they're going to be around 5% on average a year, meaning that the DCF would be around 151. But again, if you can justify a premium on this because it is such a solid company, I think that you could definitely buy into Apple at around 160, 165 and be okay with that and hold it forever, because I do think that they are eventually going to find ways to grow. I do think it's a very difficult time for the stock, but my personal opinion is that the stock has not really been hit hard enough in terms of the valuation. Because when you have a valuation that's this high, the expectations also need to be high. And I think that a lot of Wall Street and a lot of just people in general are thinking, oh, it's Apple, they're going to make money. But if you do that in perpetuity, it doesn't really work. And I think that that's why it was a better time to buy Apple a couple of years ago than it is now, just because you're not going to get the same insane levels of growth. I think there's really good margin here, but you're not really actually growing the revenue on average. I mean, it's 2%, which is still fine. I mean, I think that what they're doing is correct. They're just collecting the money over time and continuing to collect money over time, and they're not really risking anything. But when I see Apple compared to something like Amazon that's investing in all these different things and taking on a lot of risk to try and grow the company, but they also have the big cash cow, I think that's more of what Apple needs to be doing for me personally. However, if you're someone who's already bought in at a cheap price, I would maybe just ride this out and collect your dividends. I don't think that you should necessarily sell out of a company that you bought at a very low valuation just because you could find something that is going to grow more. I think that if you have a significant holding in Apple and it's paying you a dividend that you're fine with, I think that it's still a very safe stock to be invested in personally. Of course, this is my non-financial advice, non-financial advisor opinion, but I think that it's a certain type of investor that wants a little bit more stability to get into Apple. But I wouldn't get in here. I would wait until the tariff stuff goes over and know exactly what's going to end up happening and then try to make sense of it. But if you're someone who's already been holding Apple and you're up significantly, you could either trim a little bit of it off and take some of your gains, or you could just hold the stock if you're happy with the dividend and you're happy to just hold it. I do think that you're going to have decent performance in the future, especially if you got in at the right price. But my opinion is I would not want to buy this for my own personal portfolio right now, and I would urge other people to do their due diligence and kind of understand if it's something that would fit their own personal portfolio. So that's my review on Apple. Thank you so much for watching. Thank you for everyone who supports the channel. I hope you're having a great day. Bye.